Hello and welcome to Explain the Charts, your go-to channel for detailed technical analysis and market commentary. Today is October 20th, 2025, and we are taking a deep dive into one of the market's most talked about stocks, Tesla, symbol Tesla. We have a lot to cover, from major news events and conflicting analyst ratings to a thorough breakdown of the price action on the charts. First, let's get a handle on the news because there's a whirlwind of information affecting sentiment right now. The most immediate event on everyone's radar is the Q3 earnings report, scheduled for this Wednesday, October 22nd. Market expectations are leaning towards weak sales growth and potentially negative earnings per share, which is creating some anxiety among investors. Despite this, there's a strong undercurrent of optimism surrounding Tesla's long-term AI initiatives, particularly the robotaxi and Optimus robot projects. This has created a fascinating split on Wall Street. For example, Wedbush analyst Daniel Ives remains extremely bullish with a $500 price target, citing the transformative potential of AI, while BNP Paribas recently initiated coverage with an underperform rating and a $307 target, arguing that the company's valuation is too heavily based on ventures that currently generate zero revenue. The consensus rating is a hold, with an average price target around $311, which suggests significant potential downside from where the stock is currently trading. Adding to this complex picture, Tesla recently launched cheaper versions of its Model Y and Model 3, both priced under $40,000. While this was meant to spur demand after key U.S. tax credits expired, the market had a sell the news reaction, as the prices weren't as low as some had hoped. Now, let's see how these events have played out on the daily chart. Looking at the bigger picture since June, we can see an absolutely massive uptrend where the stock more than doubled, running from the $170s to a 52-week high just shy of $489 in mid-December. After that peak, we saw a significant pullback through the first quarter of 2025, finding a bottom around the $220 level in March. The price then embarked on another impressive rally, climbing all the way back to over $470 in early October. Let's zoom in on that recent peak, which directly corresponds to the news about the new, cheaper models. Here on the daily chart, from late September into early October, you can see the price surge in anticipation of a mystery event. The stock hit a 2025 high of $470.75 on October 2nd. But immediately following the official announcement of the new models, we saw a classic sell the news reaction. Notice these large red candles on October 2nd, 3rd, and especially the massive drop on October 10th, where the price gapped down and fell over 5%. This sharp decline took the price from over $470 down to a low of about $411 in just over a week. This established $470 as a major resistance level to watch. The low around $411 now serves as our most critical short-term support. Now let's switch to the hourly chart to examine the price action since that October 10th bottom. After hitting that low around $411, the stock staged a strong recovery, rallying back up to the $440 level by October 17th. This $440 area appears to be acting as immediate resistance, as the price has been consolidating and struggling to push higher. We can see a clear battle taking place here between buyers and sellers. Support on this time frame is visible around the $420 to $425 zone, which was tested and held during the rally. The volume has been fairly consistent, suggesting active participation as traders position themselves ahead of earnings. The price is currently caught between the short-term resistance at $440 and support near $425. For an even closer look, let's drill down to the 15-minute chart from last Friday, October 17th. The day started with a gap up and a strong push higher in the morning, breaking through several intraday resistance levels. The rally continued until the afternoon, where it eventually peaked just above $441 before pulling back slightly. The trading day ended with the price consolidating near the highs, closing at $439.31. This shows that bulls were largely in control throughout the session, but they failed to secure a decisive break above that key $440 resistance we saw on the hourly chart. This sets up a very interesting open for the week. So, to recap everything, let's go back to the daily chart. We're heading into a pivotal earnings week with the stock at a critical juncture. The key price levels to watch are clear. Major resistance is at the recent high of $470. A break above this would signal a continuation of the powerful uptrend. Minor resistance stands at the current consolidation ceiling around $440. On the downside, major support is at the October 10th low of $411. If that level breaks, we could see a much deeper correction, possibly towards the $350 to $370 range from September. Now for some potential scenarios, keeping in mind the upcoming earnings report is a major catalyst that can override any technical setup. A bullish scenario, which I would place at about a 60% probability, involves the stock breaking above $440 before the report. If Tesla delivers an earnings beat or, more importantly, provides very bullish guidance on future deliveries, margins, or its AI roadmap, we could see a powerful surge towards the $470 highs and beyond. A bearish scenario, with a 40% probability, would be triggered by a break below the $411 support. If earnings disappoint or if guidance suggests continued fundamental weakness, the stock could quickly sell off, especially given the high valuation and the bearish analyst targets we discussed earlier. The key thing to watch this week is the reaction to that $440 resistance and the $411 support. As the markets move through one of these levels will likely signal its intention going into the earnings announcement. And of course, the earnings call itself will be the ultimate decider for the next major move. This concludes our analysis of Tesla. Remember, this is not financial advice. All trading and investment decisions involve risk, and you should always do your own research before putting your capital on the line. Thanks for watching Explain the Charts, and we'll see you in the next video.